Good morning, Monday, everybody. Bitcoin, as you know, has been in a 6-month downtrend. And earlier this morning, just a few moments ago, we seem to have experienced our first major breakout in quite a while as bullish sentiment was flooding the social media markets. Christmas in just a few days and 1 year after the previous market bottom, nearly to the day, I'm sure everyone will be making fully rational decisions. What could possibly go wrong? Welcome to today's exciting episode of Breaking Bitcoin.
Hello everyone, my name is Silvio Micali. I'm the founder of Algorand and I'm proud and happy to be here with this edition of Breaking Bitcoin.
Welcome back to the show, everybody. Today is a Monday. It is December 23rd, 2 days until the glorious holiday of Christmas. Hopefully you are all doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or of course on Roku with the Investor News Channel app. My name is Justin Wise. I am the lead analyst and senior mentor, crackingcryptocurrency.com. It is a good day. It is a wonderful day. We've got so much to talk about. We've got some very interesting long-term things. We have some sorry, a little excited. We've got some significant changes on a few indicators that we've been tracking. We're going to bring that to you. We're also going to break down the recent trade that we just closed out as in the premium trading group, catching this movement to the downside, taking the long from last night, taking this move to the downside. Pretty good day for us. Pretty excited. I think that the hallways back in the premium trading group this morning are feeling quite happy. Early Christmas present. Before we begin, if your goal is to be a full-time professional trader, whether you want to earn passive income on the side, or whether you, like I did, want to take control of your portfolio, kind of give the finger to the traditional financial institutions and take your own financial independence into your own hands, then I recommend you check out what we do in the premium trading group. Our education focuses on technical analysis, statistical probability, and setting up good money management and risk management strategies and teaching people how to build objective technical strategies from the ground up. That is what we do. And I'm very proud to say that we are the fastest growing educational group in the space. So you can find out everything that we do. Try our 7-day free trial. That's all at premium.crackingcryptocurrency.com. There's so much that I want to talk about today. Obviously, the first thing that we're going to talk about today is the hash ribbons indicator that we've been following for quite a while. Is today going to signal a switch? So according to this indicator, minor capitulation has ended. Okay. Minor capitulation has ended. Hash rate has recovered above the difficulty level. Now, we always want to give this a few days to settle out, make sure that there's no false signals in this. And keep in mind that in and of itself is not a buy signal by itself. But I will say that of my trifecta of elements, so there's about 7 to 8 technical indications that pointed me down toward lower prices, which I still think is more likely than the breakout at this point in time, or at least entering into the bull market at this point in time. I think that's far more likely at this point in time. But I will say that was a significant piece of the pie, and that is now off the table. So as many bearish indications as we had previously, one has been removed from the table. And as somebody who trades in a objective technical fashion, I need for the bullish argument to outweigh the bearish argument. So just as I posted this morning and last night when I was posting the long for last night, and just as I was doing my analysis for the group this morning, and I was talking about, and we exited the long in profit around 75.50 and took the short and managed to capture this movement to the downside. So I talked about, listen, guys, it's okay looking at a few of these things that are starting to change and beginning to feel a little bullish, but I will personally rain down with fire and fury upon my students who remove their hedge. Now, of course, your trading decisions are your own, but I just want to, kind of express the vehemence at which I feel about this, because most individuals do not approach the market from a perspective of managing risk, So we're going to break that all down today in today's episode. Of course, let's give away some crypto. And before we begin, I do have to give a big shout out. Of course, for many in the crypto game, we're going to be trading on multiple exchanges. So we're going to be going over to Binance and grabbing Litecoin, or going over to Bittrex and grabbing, God forbid, XRP. And Kraken, Coinbase Pro for our USD dollar trades. And managing all of these accounts and exchanges can become a nightmare. It can be a huge headache. You've got VPNs on different computers and screens. I know this is how I've lived the majority of the last 3 years of my professional trading career, trading cryptocurrency. But our friends over at Coygo have developed a turnkey solution. They have an application. It is absolutely free to use. You can go try it out right now at coygo.crackingcryptocurrency.com. We do not make any money from you clicking on that link. It's just a tracker to see how well it fits the channel. But they have a free app. It's in beta, so you guys can go test it. You guys can go utilize it. You can manage your accounts. You don't have to put your API keys in. And the best thing is your API keys are always stored locally on your own machine, which fits very well with my belief in not your keys, not your coins. API keys fall right into that as well. Always been quite skeptical of third-party solutions. Very popular among their users is the arbitrage spreads. You can view real-time arbitrage spreads, and because you can transfer funds right there in the app between exchanges, you can take advantage of those opportunities. So if you're looking to beef up your day trading strategy or your regular trading strategy with other derivatives, things like options or, again, futures contracts, which we heavily rely on in this space, you can also look at arbitrage as well. And their app kind of allows you to do that. So before we begin, I want to give them a big thank you for sponsoring the show. Here's a brief word on them, and then we're going to get into today's analysis, guys.
Do you trade cryptocurrencies on multiple exchanges? Coygo is here to help. View real-time insights, including trade analysis, order book superiority, arbitrage scanning, and more. No API keys required. Want to trade, transfer between wallets, or track your portfolio across exchanges? No problem. Just connect your API keys. They're only stored securely on your machine. Coygo servers never have access to your cryptocurrency accounts. Sign up now at coygo.app.
All right. I also want to thank today's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io. And let's grab Friday's video. And we need to go to the random comment picker. Yes, this is the one that we use. Let's just pop that in there, load the comments out, and randomly pick a winner for Friday's video. John Famiglietti. Hopefully I said that right. He says the thumbnails get me every time. Lol, but you're the best. Thank you so much, my friend. Highly appreciated. Big shout out to Mr. Scott for designing those. He is the creative power behind what we do. So please get a hold of me in the Discord, my friend, and I will tip you some crypto. And guys, without further ado, to the charts. All right, and here we are at the latest scene of the carnage, guys. So let's talk about, let's break this down. And first off, let me give a huge shout out to my D-Lives over there. What's going on, guys? Good morning to you. Hopefully you're doing fantastic. As I always do, let's throw some lemons in this chest, and we're going to be distributing these lemons. Exciting day, guys. Exciting day. So I know that the price action is exciting. Yes. So let's go to the daily. Let's go to the daily. And we talked about this last night. I think I need to kind of like Control Z. I don't know if it's going to show it. No, probably not. Not since, because I have this pulled up in another browser, so it's not going to pull up, kind of push the edit through. Anyways, doesn't matter. I can kind of show you guys. Go right here, right there, give or take. Just want to kind of give you guys my previous setup and explain what I've done. I'll flip some bits. Sorry. Okay, right here. And then we're going to look at all the regular supply and demand levels. We're going to look at it. We're going to look at all the things. Yesterday, did get a traditional PTP breakout long signal. And I'm sure it came through in my analysis last night. And one of the best things about trading technical objective signals that you've back tested to have a high hit rate is going to be the ease at which you trade. And I know that's one of the most transformative things that students of ours who come in and learn how we trade and adopt the methodologies themselves, that's the first comment. They're like, they tell me, well, they tell lots of people, but they tell me that it's good to be able to take trades and sleep at night, not only because you're now managing your risk and you know what your maximum downside is in the worst case scenario, and not only just your trades that you have on, but any spot positions that you have in Bitcoin, because we are either simply spot long and we know what our max downside is, or you're hedged short. And you, again, know what your absolute max downside is. And I would say that the majority of traders in cryptocurrency are unaware of those things, right? From a dollar perspective, right? So first off, you have the camp of traders who are only concerned about sat value. That's fine. But regular traders, I don't want to say regular traders, but majority of traders like myself who are focused on increasing their dollar value, right? Like we all look at the BTC USD chart. We all want number to go up for the most part in the long term. And that is Bitcoin versus dollars, right? And in the macro sense, right? Like the meta sense, we want to eventually not care about the number on the right-hand side, but we all know that is a long journey to get there, right? Long journey to get there. And while I still have to pay my bills in dollars, we are concerned about our dollar margin. That's not that we are obsessed about it, but that is what we're focused on. So anyways, and hedging allows you to do that, operating from a cash neutral basis. But again, that is that is a far better alternative, in my opinion, to selling into BTC USD. Don't really like spot trading like that. Having said that, yesterday got a regular PTB breakout long signal, and I will not lie, I have a bearish bias. So it was, so you generally 99 out of 100 times when I put on a trade, it's unthinking, it's automatic, it's robotic. I have no problem. I know if I will win or lose. But I am also at times a discretionary rules-based trader, right? I have rules where I take discretionary setups. Everyone that's in my group and everyone that knows me and has traded with me knows this. And so I do I apply discretion to certain setups of mine. And I've had a bearish bias for a while. And so, it can be one of those times where I look at the chart an extra second and I'm like, I don't know how I feel about this one. But anyways, I took the long last night at the daily close, logged out of my accounts, went to bed, right? Well, not directly. I stayed up and worked, but went to bed and I don't look at the charts again. Because what's the point? I'm not going to countermand my daily setup, right? I do that in the morning, right? So in the morning, as I woke up this morning, I logged in, looked at structure on the lower time frames. I started from the top and worked my way down. It's a Monday open. How is the market responding? How is the American opening market responded to this? I got up at about 6:30 this morning. Got to the, so I woke up at 6:30, got to the charts around 7:30. And I had seen that price, and we can see this on well, before we get into that, we can just see, here's the regular signal. Of course, we have the Wadatar powerful signal that came in yesterday, CCI confirming above the baseline, and of course, Minx giving us the go-ahead. So, reverse to this morning. And, I got in and I got with my analyst team this morning, and we were kind of looking at everything, looking at price. And the one setup, and it's funny because I wrote this down to post about it, and then it happened. And so then I had to not only post that in my educational channel this morning for the members, detailing exactly how this trade setup was generated. And this is, in general, people call it different things, but I call it a swing failure pattern. This is a lower time frame swing failure pattern. So we've made a new daily high. And what we saw, two ways this can happen. A new daily high, and this is on Coinbase. So let's actually go look at, for example, I don't have the same charts open up here. So that's my trading computer. So let me load CME futures. There's two ways you can see this occur. Here's the CME futures chart. There's two ways you can see this occur. Obviously, the first thing that I woke up to this morning was everybody talking about the gap. The gap has now been tentatively filled, right? The gap stretching from 74.20 to 72.35. There's about a $40 to $50 premium on the CME futures price, depending on the exchange that you're trading on. So I'm trading on Bybit, so I noticed there was about a $40 to $50 premium at peak. So be aware of that when you're setting your limit orders, and of course use your exchange to actually navigate where you're going to be setting your orders. Example, right? So several factors here that influenced my trade this morning was the swing failure pattern. We can kind of go back in time and see this previous high, all right? This previous high, the last high that we had made, coming back all the way up to the top of this range. And what did we do? We rated it for liquidity, right? So we wicked above that line and immediately got sold into. And that in and of itself, if that happens on okay volume, that's not anything that I really concern myself with price action wise. But look at the volume on that is what's known as a blow off top. And what do we get? Very following that, we get a bearish engulfing candle all the way down to the bottom of the range. 9 out of 10 times, that's not going to be anything like a stop loss hunt or a fake out, right? You know, if the candle that wicks up and forms the swing failure pattern closes red, that's extremely bad. That's almost always bearish. If it closes green, you sometimes can get a pullback and then continuation. It's still safer to have the bearish bias, but maybe wait for the initial sell off and then, you know, short the BPC or the rounded retest, right? Can often be a good setup. But in this case, I just knew. I just had that feeling. I had been hesitant about the long in the first place, even though I took it without question because my system signaled for it. And, you know, so monitoring the price action this morning with my team and hearing their bearish bias and knowing exactly what I was looking for, gave me quite a bit of confidence in the setup. So anyways, I was able to stagger in right around between 75.50 and 75.70. Immediately got that posted. And again, the way that I generally do things is I post the signal to my group first, to my members, to my family, and then I enter into the trade, right? So I've got multiple screens set up. But I don't want anybody to, I just do that because I think that's the right thing to do, right? And it only takes me an extra second, right? So you got some people, because I've talked to other people who disseminate trades or share trades or anything like that, or copy traders who will take the trade and then post. It's whatever. It's probably a minor thing. Doesn't matter. But anyways, and of course we had Agri Trade come up. So the order books were really cool to watch this morning. By the way, I don't know if you guys are aware of this, but you know, what we were talking about too as well was this kind of battle over on Coinbase. And we'll pull open, while we're sitting here talking about this, I'll pull open Agri Trade. Was this battle on Coinbase. So there are two whales, it seems, right? Two whales, it seems, battling it out on the Coinbase order books, right? You know, I watched it all morning, right? Spoof orders come in and off the books, big market buys, lots of flexing, you know, pretty much about 300 BTC sells. And I noticed that a few people also noticed this on Twitter. Some other people posted about it on Twitter this morning. But on the Coinbase order books, Coinbase Pro, seeing about, you know, 300 BTC sell walls flash on and off, which you don't often see on Coinbase, which is why it was unique. So when I was kind of alerted to it, I went and looked and I was like, this is kind of weird. And anywhere between like 50 to 150 spoof orders to the buy side show up. And then big market orders, 30 BTC market orders, 20 BTC market orders to both sides. So pretty intense battle. Right throughout this entire range. Right here, you know, all throughout this lower time frame range, pretty much from here up and then kind of over this period. So you can kind of see the big market winning, big market buys winning. And then just as we were kind of wicking up to the upside, there was a pretty intense battle, but ultimately ended up in a swing failure pattern, in a reversal signal. And we were able to catch that move into the downside. Now I have gone ahead. My targets for this trade, we're just targeting the CME gap. So I've already taken 50% of my profit off the table now. I haven't moved my hard stop loss to break even. I am going to be kind of watching this and potentially refilling back at 75.50 if it fails, and we are going to get a more pronounced movement. But before we get into that, I want to explain a couple other factors that I'm watching this morning, and that is going to be going over here to here's our hash rate. Here is our hash rate in funding. All right, what should we monitor? And something has happened today that has not happened since November 19th. And remember, on November 19th, we did enter into the period of minor capitulation, which is kind of our huge warning that there's going to be a big blow-off bottom. I didn't see exactly the blow-off bottom that I wanted. I really was and still am looking for that movement to 4.9K. And discretionarily, I'm really looking at all the bullish sentiment that's going into the market right now, and I'm just not really feeling it. I was hesitant about the long trade yesterday because, you know, my discretion, my experience is telling me, again, this is not the time of year to typically go long. December is almost universally not a good time to go long, especially the week before or of Christmas. It's almost always sellers in control from the macro. And we have seen, you know, like one exciting bullish candle, you know, that bounce off of the bottom. And then what seemed to be the actual breakout candle yesterday. But it was Sunday, weekend volume. But again, kind of the interesting thing about Bitcoin is because the futures do open up on Sunday evening, we can't often get deterministic data on a Sunday, right? But Saturday is often Saturday trading, so Saturday trading, there can often be trade setups or opportunities. But higher time frame wise, macro perspective, Saturday is almost always like complete garbage data, right? So for your daily. So We've talked about this before. But anyways, let's stay on point because I want to kind of tie up Bitcoin here and then move on to the broader market and control. So we do have, and this will confirm on the daily. The hash ribbons indicator will confirm on the daily. It's the one by Capriel Charles. He's got a Medium post if you guys would like to read more about this. I've linked this in previous videos. I've talked about this. And this, on top of BITMEX funding, on top of the monthly sell signal, on top of the weekly, on top of the pending daily or DMA baseline cross under the 13 and the 55 moving average on the weekly. And the daily 55 and the daily 55, as well as Wadatar explosion. About seven huge chinks in the bullish narrative here for me. And so on the close of this candle, so let's be more fair here because we need to be a little bit more nuanced about the hash ribbons indicator. It will be one thing that is going to be that would be pulled from my bearish argument, but it won't necessarily be slid over until the bullish argument just yet, right? The bullish argument's still very weak for me. As far as I can tell, the only bullish arguments that I think have some self-fulfilling, some technical standing, but more in the realm of not really technical indications that I look for or have respect for or fit into my analysis or trading, but more because they tend to be self-fulfilling prophecies. And that's going to be probably the most popular indicator out there that new traders are going to use, but it's the one that's thrown in your face. Is the relative strength index, as well as the MACD potentially. These are two, obviously, some of the most common technical indicators that we can see. And the relative strength index did, of course, reach oversold levels over here on the daily and did form bullish divergence, right? And then what do we get as a result of that? We got a big pump candle up to relative resistance, and we've gotten a little bit of follow through, but again, feels like a bull trap for the most part so far. And then as well, we can see that bullish divergence on the MACD as well, and rising MACD momentum, right? So again, two popular meme indicators that are very, very popular with newer traders, and unfortunately, they're just they are indicators that even those who are considered experts in this field or good chartists or good analysts or good traders, because there's a difference, right? You have good analysts and you have good traders. They even talk about it quite a bit. So, let us then turn to BITMEX funding, and BITMEX funding on the daily is still popular or still bullish. So BITMEX funding is positive. And to confirm this, of course, let's not just rely on an indicator. We'll go over to BITMEX and we will look at, actually, you know what? I can never figure out, so we have to Google BITMEX funding. And then, DuckDuckGo in this case. And we just go to funding history at BITMEX. So just to confirm, you guys can see it right here from BITMEX. We can see that XBT USD contract daily or funding is positive, right? So here's the aggregated funding, right? So, all right, so funding is still positive, meaning that many individuals are still trying to long this market. That is a good contrarian signal to the downside. That is a good contrarian bearish signal. If we take a look at often when funding is positive, we can see a clear correlation between funding and price not moving up, right? Okay, and it's only generally when funding turns negative and individuals are attempting to short the market that we get pumps. Right, so funding is positive. Funding finally turns negative here. Movement up. Let's see here. Funding is positive right here. Funding finally turns negative here and movement up. And funding is pretty much positive all throughout here. And then again, funding turns negative on the day right before the movement. Funding turns negative the day before the movement. I mean, come on, guys. Retail almost always gets it wrong. Now, being more specific with the hash ribbons indicator, the strategy that is recommended from the creator of this indicator is to apply two DMAs, simple daily moving averages, to your chart, the 10 and the 20. And there's been one really bad signal from one abject loser from the hash ribbons indicator historically. This would be the 9th such signal that we've received since Bitcoin's history. And if you look at the drawdown associated with just trading off of this strategy, applying the 10 and 20 simple moving average, that comes from, I want to credit the right person who added this addendum. Mr. A, I believe, over on Twitter, had the Agent Smith icon for a while. Pretty decent individual to follow. His analysis is okay. I don't trade the way that he does, but again, all traders are going to bring something different to the table. His analysis showed that, and I have confirmed this, that applying the 10 and 20 simple moving average to your chart and just waiting for the 10-20 cross up after the recovery signal does eliminate almost all drawdown associated with the strategy, right? So we haven't received that yet. So if you're just looking at this and wanting to remove this from the bearish argument and move it over to the bullish argument, that's fine. But I do recommend that you wait for that simple moving average crossover and wait for price to be bullish. Now, if you want to be aggressive, that's fine. Just understand that being aggressive carries inherent risk when you're kind of looking to enter early, right? For me, until the bullish argument outweighs the bearish, then I'm still going to be hedged, right? So for me, I make a lot of money in bull markets because I'm spot long. And then when the higher time frames do signal that that's flagging out or becoming bearish, then I move to a hedge, right? So that way, for my trading account, you don't lose money when Bitcoin starts moving down. Like at some point, you have to be quite happy, right? And when you get 60 to 80+% gains on a bullish maneuver off your entire capital balance, you kind of have to be happy with that and then lock that in, right, with a hedge. And then if your trading signal, if the higher timeframes then continue on and give you a good signal that we're going to get another continuation of this wave, then you can unhedge and go long. So you don't lose any money. You just lose sats by hedging your positions, by hedging your equity with a short sell. And if you do it the right way, like we teach individuals to, you have controlled for your downside, right? And that was probably another thing on top of sleeping well at night because of trading the daily and trading objectively. That is probably the other thing that students will say is that learning how to hedge and protecting themselves and knowing just when should you hold Bitcoin and when should you not, right? So that's fairly simple. That's a fairly simple concept, and we make that simple. And then you can begin adding complexity into that, whether it's discretionary trades or other markets or altcoins or leverage or anything like that, right? But you gotta start with, should I have risk on or long exposure to Bitcoin, or should I have risk off or short exposure to Bitcoin, right? Simple. And you can accomplish this by buying and selling BTC USD spot. That's okay. But in my experience, most individuals just do not have the fortitude to do that very well because it's a psychological thing. Like you are selling your Bitcoin and you're now holding cash, right? And you now have to actively buy back into the market rather than having a short position open and just closing that at some point in time, right? So we've laid out these two narratives. So I am going to remove, as long as this closes and gives the confirmation, I'm going to double check this with like the Willy Woo chart and the actual Capriel Charles chart later on. I will be removing hash ribbons from the bearish argument, but putting it on hold for the bullish argument until that 1020 DEMA crossover, okay? BITMEX funding still pretty strongly in the bearish argumentation. Now let's take a little bit of a wider view of the market. Let's go to the daily. And I will, this is from last night's educational post to the members when I was talking about setting a split bid. All right, so let's zoom out here to the weekly and let's look at our levels. Again, we can utilize, or we do utilize, the volume profile as well as our EMAs to help us nuance and determine these levels. And so we still have overhead supply in the form of the 55, the daily 55 exponential moving average, coming in right around the range. Let me make sure that I quote this correctly, 83.31 and 78.57, right? And we didn't quite get there, right? But we did come very, very close to our 55 DMA or daily exponential moving average. And we are currently, again, kind of experiencing that as a rejection zone. And that's kind of what I talked about. That's what I talked about. I would have liked, the daily long signal did have us kind of pushing up to the 78. 78.07 was our first TP. I ended up cutting that trade early and locking in the profit on the long trade that was opened up last night. And I'm glad that I did because we were able to catch the reversal in time. But, I would have liked to see price kind of toy or wick above the daily 55, which it still could, right? the day could still close bullish. I think that's unlikely at this point in time, seeing that kind of battle between and it's quite possible, and this is the worst thing, it's quite possible that kind of order book warfare that I was talking about was just one trader, right? And it just is what it is, guys, in a relatively illiquid market compared to stocks or something like that, right? So again, negativity can just, the negativity about that, the screams of market manipulation, like you guys can just take that argument and just go elsewhere with that, because there's a lot of money to be made in this channel, or not, well, in this channel, but in this market, life-changing money. And it just is what it is. These are all known knowns, and they're all things that can be easily fit into your strategy. It's not market manipulation that's making you lose money. It's poor discipline and lack of trading strategy, right? So you always hear that, right? People are like, market manipulation, like, look at this order book spoofing. It's just, people who know what they're doing aren't losing money because of that stuff. Only people who don't know what they're doing are losing money because of that stuff. And they'd be losing money anyways. They'd be losing money on the S&P 500. They'd be losing money in the Forex markets, trading the pound dollar, because they haven't learned how to trade yet. And that's generally less technical, and that's generally more risk management and discipline. Just throwing that out there, right? So of course, let's just, starting off on Monday, let's get a good footing. So overhead supply, i.e. resistance from 7,700 to 8,300. These are all macro. These are weekly levels. These are levels I want to see broken on higher time frames before I start talking about, higher highs for the year or a bullish 2020. These are all macro technical things that I look at to determine where we overall are and kind of where we're going. It's only silly people, you kind of hear this all the time, like, look at this 4-hour setup. Like, clearly this means we're getting higher highs. It's all nonsense. You determine your directional bias or your macro from the weekly, the monthly, maybe the daily. The daily is what I like to trade on and develop short-term or meso-term directional bias, right? Not where are we going in the macro. You really need to kind of look out and look at the weekly. I would also argue that this weekly candle is fairly weak. And another alternative setup that we talked about is, so let me paint a bullish scenario that would make sense to me. Let's assume that demand was filled enough on these two bull wicks down into our high volume node down here. And we do kind of have to zoom out a little bit more to see that high volume node. All right. So historical support, 6,400. Again, really stretching from 6,100 to about 6,500. So, but 6,400 would represent the kind of mean of that. And we have wicked off of that twice, right? So I will be frank about that. We wicked off that level twice. But something that would make sense to me, I saw, and maybe this is just because of the sentiment, but the technicals do align, especially from Fibonacci or other analysts, would be the movement down below the weekly open. That would trap a lot. So that would clear out a lot of long liquidity, obviously, but I don't think that a lot of stop losses would actually be triggered there. I don't think that a lot of people are over leveraged in that area on the weekly open. I don't think that a lot of people went long on the close of this weekly candle. I think that the bigger traders who went long were probably down around here, so they're relatively safe on this. And this would most likely be their echelon that we'd be putting on these trades. But moving down below the weekly open, I think would make a lot of people capitulate. And so I could see that. I could see, and it would make anybody who shorted this upper range really feel like a golden god. And I don't know if you guys have experienced this, but whenever you put on a big position or you really take a big risk on a position and, trade moves in your favor quite a bit, you really kind of start to feel invincible and bulletproof, and you just think it's going to keep going. The problem that this is kind of a newer trader problem where you don't take profit and scale out. You don't take profit and scale out. And then your price will end up reversing, and you won't see the signs, and you won't be humble enough to just take profit or admit that you were wrong. And then often you can end up at a loss, and then you end up exiting at a panic. And I've talked about this before, those psychological moments in the market. If you're looking at a chart and you start to feel FOMO or panic, almost the entire retail market is feeling the exact same thing at the same time. I don't know why. People are going to say like, oh, humans are synchronous, and waves and spirits and soul bonding. I don't know if you guys have seen the later episode of Rick and Morty, and that might be true. I have no clue. I don't really believe in that stuff, but I do notice that I think it's because humans are hardwired the same way, and that we have the same feelings of panic and fear and emotion, and we're all generally in the same spot when we're trading crypto. Those moments of peak pain are always the worst times to make decisions. And people inevitably, the majority of traders, end up making decisions in those moments of peak pain. And that's how we get things like cascading stop losses and, huge scam wicks and things of that nature, right? It's all natural movements in the market. It's just some people know how to exploit those for gain and some people don't know how to exploit those and are victims of those areas, which is unfortunately the majority of traders. Now, so I do think that a V bottom out of this is slightly possible at this point in time. Really kind of depends on how the daily closes. Right now, for my personal trading, if price comes back to my entry, I'll exit at this point in time, depending on how price action looks. If we just bull run up there, then I'll probably reshort it. If we kind of creep up there, and that's kind of a different story. Again, remember when we approach resistance creeping, then we tend to blast through it. When we approach in high momentum, we often deflected. So anyways, I think that largely it should be a mostly risk off day. I think that, I think people are going to be kind of scrambling for an opportunity here. And I think that they're most likely going to be on the wrong side of the market. So just be cautious, guys. Often, again, just historically, if you just guys want to be safe, the bearish argument is still much stronger macro than the bullish argument. And it's also, again, the week before Christmas or the week of Christmas and going into the end of the year. And this is often not a buyer's market. It's often a seller's market. Now, does that have the probability to be wrong? Yes. But, just be safe, guys. Nobody wants to be stressing out on Christmas. Nobody wants to be stressing out during the holidays. Just the market's going to be here no matter what. And stick to your macro analysis. And if you're hedged and your analysis tells you to be hedged, then you're completely safe. And if you're spot long and you have good reason to be bullish, then you're completely fine. With that being said, above all, trade safely. So let's go down to... And then I don't know if I made this very clear, the break of 6,400, then we have the 200 daily simple moving average in our next high volume node cluster, again, coming in at my lower downside target, 4.95.2K, where I will, all things remaining equal, be buying bigly. I do not know who that was. Call back later, guys. Now, Sorry, let's get rid of the EMAs. Let's get rid of the Verper. Good buys. Come on, buys. Let's go, baby. Yeah, lower time frames, couple bullwicks to the downside. Let's see if we can V-bottom back up and get rejected from the range. There's really no action to take her. If you were kind of brave enough to grab the second wick, I did kind of want to start off the show that way and say that there might be, a scalp opportunity to the upside. For right now, I wouldn't have any conviction in taking a long side trade right now that wasn't a scalp. Anything like that, I would want to be automated, because things like that, when you're counter trend trading, you want to be able to respond very quickly. And I prefer to trade a little bit more calmly, passively. I like to make a plan and then act off of that plan. Okay, and as I said, we've still got more gap to fill. Again, just looking at the CMEs, we do have another, about 1.5%, maybe 2% more to the downside to really fill this gap up nicely. And again, just really concerning, guys. I'm not going to lie, for like longer term, that's a big volume spike, right? It's a big volume spike to the upside. That's a big liquidity grab. And those things tend to have some good sustained follow through, right? And again, when they do occur and they do end up getting sold off into, we can see it over here. The exact same thing happens over here. We have, again, running to the upside, wick, and then a lot of downside. We can see the same thing over here. 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 Those aren't good. They're good in a buyer's market. Again, so let me rephrase this. Maybe this will make more sense in the macro, right? when you're trending on the higher time frames, like the daily, the weekly to the upside, and you're like clearly bullish, right? Like price just keeps going up every day, right? Then when you see wicks to the downside, those are almost always buying opportunities, right? Because you're in a buyer's market, right? That's a good opportunity to buy. When you're in a seller's market, when you've been in a pronounced downtrend, and it's more often than not the case, when every day price is lower than it was yesterday, let's just look at the last 6 months. Is this a buyer or seller's market? Come on, guys. Things don't, you want to be very cautious about changing on flip-flopping on the daily. The trend is your friend. Then generally every correction or big bullwhip to the upside is a selling opportunity, right? That's a little bit of discretionary nuance that can typically help you out and save you a lot of money. All right, let's, by the way, that movement failed hard. Just rejected. All right. I'll be honest. We were going pretty loud this morning watching AgriTrade. We were going a little wild. Okay, how are you guys doing in the chat, man? Sorry. Let me make sure that I covered all of my... it's funny because this is literally what I wrote this morning. This is what I wanted to share in my analysis channel, because when I started sitting down to kind of write my analysis, we were right here. Okay. And then this is when I woke up and first looked at the chart. And then this is when I sat down with my coffee at the monitor to begin my daily and morning analysis and morning trading. And I have it written down right here. What to watch for to get out of the long: run up, followed by first sell off, which I said we'd already seen. Run up, followed by first sell off, followed by a run up with a lower high, right, which we saw right here, followed by a stop loss hunt to the upside. If we close on a big wick, then this upside movement has failed and we can settle and we can sell into it. I'm reading verbatim on the show notes. And that's exactly what happened. So. Okay. And if we close above it, of course, if this candle would have closed above here as a higher high, then I would have been quite bullish. I would have stayed in my long, which I had already positioned for appropriately, and carried it on up. And I felt pretty confident we would hit 7807, maybe even 8K. But as I said, contracting volatility and expansion. We have Bollinger Band expansion. We have Water-Tar explosion expansion. We have all the volatility filters picking up. Expect the movement to be pronounced and volatile. Because most trending indicators have signaled long on yesterday's close. You want to be, again, as I said, felt cautious about that yesterday anyways, because I know you get the Shark Tank up there, right? But what I think what happened yesterday and why I was glad to take the long is because individuals that took it too early, like people that tried to short into into basically what appears to be like an unshaven bullish candle. So a bullish candle obviously is a candle that has a higher close than its open. But unshaven bullish a shaved bullish candle basically means, I said wrong, unshaven. It's a shaved bullish candle. You can get a little bit more, what's the word I'm looking for here? Jargony with it, depending on like who you trade with or where you're at. But there's no wicks to the upside or downside. Not really what you want to sell into, right? For monitoring the daily and looking for signals to trade, you're really looking for wicks, right? Bull wicks, bear wicks. So this is a very clear bear wick. And or doji, depends how the day closes. But again, indecision and or reversal signal, not a strong continuation signal. With that being said, let's take a look at the broader market this morning. Again, kind of started off as a good day. Some nice pump ups on many of our USD valuations here. VeChain obviously doing quite well. BCN is that Bitcoin. Yeah, Bitcoin taking a ride. Lisk, the wickiest of all coins that we've ever traded. We've got Enigma. We've got Blockstack. Go Blockstack. No bias there. Luna, we've got Cosmos, which we took. We actually traded that this morning. Tezos, which we're actually trading right now. So pretty good day. A little bit more active day for us trading this morning. But again, shout out to all the premium members. Kind of just hanging around the members lounge. You're getting into these setups and trades. contributing their setups. Shout out to the just general chat members as well, guys. You guys have really been picking it up, helping new people come in, posting good trade setups. So overall, moving into Christmas, I'm really, really grateful for everything that we've been able to build over the course of the year, and being able to do the show every day. It's really heartening. And I know I've talked about Bitcoin for an hour, and we're going to be moving into the break. So we will be doing Maribozu. Thank you very much, man. Yeah, Maribozu. Would be the shaved candle, right? Moving in, we're going to be doing the news today, which I want to cover. We've got some interesting news that I want to talk about in the second hour, but I was pleased to do it. I've gotten some requests for Ethereum. I'll be really, really honest with you guys. Like, I don't really see a lot of edge on Ethereum. I'd really rather trade Bitcoin right now. And I think that you should most likely just pick a dollar pair and go with it. If you want to trade Ethereum, that's fine. You're going to have slightly different levels. It's going to move in the exact same direction and roughly at exactly the same time. I think you can actually look at Ethereum as a leading indicator because it is more volatile at this point in time. But again, for me, for my leverage trading, just pick one. And then I am over here. I'm using Binance and Binance US to pick up other pairs that I want to trade currently. So let's take a gander at. All right, hold on. Let me look at. Yeah, pretty good. Not bad. Let's look at. That's on the daily. Yeah, far more pronounced movement on Ethereum. Well, but again, relatively, the movement to the upside on Ethereum was not as tradable, and again, the movement to the upside less so as well. So you just kind of really have to pick your poison on what you want to trade here, to be quite honest. I think they're both equally fine choices, to be honest with you. Just Bitcoin is easier to map, I think. But everything that I said about Bitcoin applies to Ethereum, because we just have far more things that we can look at with Bitcoin that we can't look at for Ethereum. But Ethereum there's no, we'll be very clear with this. As far as USD value, there is no divergence from Bitcoin's price. Bitcoin moves the entire market right now. And it has, I've said this for a long, long, long time. People come on and they're like, so I just want to make this very clear. Pretty much for the last 6 months, right? And I've been very, very clear in saying this, right? If you are looking to go, if you're a dollar-based trader, right? If you just want to increase your dollar margin, you've generally been better off just trading Bitcoin and ignoring altcoins. If you're a BTC margin trader, then you want to potentially consider trading altcoins. And if you can do so in such a way, if you're hedged in such a way that you can actually increase your dollar value, that's fine. But if you just kind of go take any altcoin chart and look at its USD valuation, with some few exceptions, with a few exceptions, right? We have seen some nice bullish runs, and you kind of want to be monitoring those. I think that's why the USD chart is really, really good for that. Because if you see an altcoin's USD value go up while Bitcoin is going relatively down, that's a good signal to maybe buy that altcoin, right? Because those movements tend to last for quite a while. With that being said, let's take a little bit of a. I didn't have Restream chat open. Let's take a little bit of a bitty pause here, right? Take a little bit of a bitty pause here. And let me look and see if... Okay, sorry, I missed the super chat, so I want to give some shout outs to people. We've got the S-Coin King, I think right at the beginning of the show, man. Sorry that again, not trying to ignore anybody. I just get into the zone and I want to get in here, man. We've got Mr. Eli back, the S-Coin King, of course. Thank you so much, my friend. He says, happy holidays, Justin. Happy holidays, Justin. Hope you're enjoying it. Please take a look at waves when you get a chance. I think it's a great time to look at waves. Let's look at waves. For a currency eruption. Sorry. You know who you are. Shout out to you, my friend. Listen, Waves has been one of the funner coins to trade. Again, coming off the heels of a really nice run up, man. Lot of strife, nice consolidation, great opportunities, pretty much good volatility. I mean, look at this wick. That's a 24% movement in one day in dollar valuation. Of course, you kind of got to look at Bitcoin as well. Okay, so let's get a good picture on Mr. Waves here. All right, long pronounced downtrend. First pop to the upside. Let's determine some levels here first and foremost. And I think I'm going to be pretty consistent in this. I love you so much, Eli, but kind of the way that I trade, I sometimes feel like I'm a broken record. I believe I mostly just repeat myself. Wally, thank you so much for the diamond, my friend. Big bids coming in on over there. Thank you, my friend. He says, no jamming. All right, let's see here. So Waves in a high volume node right now, wicking up into that low volume node above, grabbing liquidity, looking for a nice break to the upside. I don't know, man. Okay. This is the first level of significant resistance that we've run into. Again, very pronounced bear trend. And it's kind of like the first pop up off the bottom. I think that individuals have been overall extremely excited. And I'm, me, guys, I'm not going to be the guy that's sitting here really bullish on altcoins, man. So the whole, hold it until 10K. That's not me. You got to go to Twitter for that, man. I just trade. I'm just a trader. Let's see here. Yeah, I don't like this, man. Big bear wicks to the upside, consolidation period, super tight. As I said, you have the right to have a bullish bias. I don't think that entering into position right now is a good option. We kind of talked about, listen, so we got the daily 1355 crossover. So again, I would want to be pullbacks or opportunities. So we're looking at anywhere from like 10 to 16% pullbacks in dollar valuation on Waves. And again, that will fluctuate with Bitcoin. But those are the opportunities I would want to be monitoring for and managing risk either below the below the 55 is kind of what you want to do, right? So when you're in a bullish posture, you can take opportunities. I just really don't like this range with the bull wicks. I would really like to see a nice dollar value pullback on this and then continuation. Or of course, something like a breakout, right? Yeah, we've got minks that crossed under to the underside on this candle, allowed you to sell this peak. We're going to have Wadatar explosion, which got you, which would have had you okay in this trade from the initial breakout. And then maybe if they waited about a quarter of the way through the movement, allowing you to capture the big meat of it, right? The big meat of it. It's about to tell you to get out. You've got descending bullish momentum right here, and all you need is one daily candle to close underneath there. CCI is kind of dragging back down toward the dynamic zero line. As I said, Mink's already crossed under, but it is above the zero line, so you could also look for that bottoming above zero. Those are all good. The indicators that I utilize, technical indications for a good reversal, and I think you'd be justified in looking for one because, again, you do have that daily crossover. Again, the only things that concern me is this is the first significant pop out of a bearish trend. You always want to be cautious about those. You have the bear wicks to the upside. I would be less inclined to take a breakout, more inclined to take a pullback, man. But again, as always, look at what we've seen. Make sure you secure some profit, man, and manage your downside risk. And if you want to look for continuation, I would look for those pullback continuations, my friend. Let's get you some sad advice here. Getting really tight on the daily. Yeah, so yeah, big run up. Pretty wide range, but we're seeing that range contract. People are going to slap a triangle on there. People are going to throw, trend lines on there, whatever. You don't need those things to see the range contracting. Wadatar explosion level falling. Yeah. Weaker up thrust, weaker up thrust. Yeah, I'd be extremely cautious entering into a position on waves, wanting to secure profit on waves, especially on a green candle, especially with Bitcoin that just rejected from its high. I think we also talked about the daily 200 DEMA breakout too as well. And it's kind of creeping lower to us, but we're currently rejecting from it. That's about, I think, 12,550 sats, 12,570 sats, right? Yeah. So, you know, close above that, kind of a good signal for right now. I would be selling this right now if I hadn't already. And I've said this before. Or at least securing partial profits, moving my stop loss to break even and looking for some convincing breakout trade on good volume. But I don't like buying into a distribution range after a long run up, right? This looks like a distribution range. So let the bulls and the bears kind of battle it out. This is generally not as a trend trader where you want to be buying. I think that you are justified to be looking for more pronounced pullbacks to enter into long or buying opportunities. But all that said, with everything that I said, trade safely, man. And of course, the S Coin King. Jim Spence says, need that cracking crypto Christmas pamp, baby. That was it. That was all we had, man. That was all the ammunition in the tank, brother. All right. With that being said, man, we're going to take a brief break. So let's go say hello to our friends over at Bybit, and we will be right back. Don't go anywhere, guys. Deep knee bends. I'm just going to go grab some water, and I'll see you all in just a moment. With the news, we're going to give away some crypto on DLive. We're going to answer your questions and look at your chart requests. Be right back, guys. This is Jason when he first learned about Bitcoin margin trading on BITMEX.
Why? Why? Give it back! Give it back! Oh, give it back!
This is Jason 6 months later after signing up for Bybit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcryptocurrency.com. Hey guys, what's going on? And we're back. So the first thing I want to do, as we do, reward our followers. Distribute those rewards on DLive. Congratulations in advance. Caleb, good to see you, my friend. M. Bates. Hopefully you guys are doing fantastic today. Forza Solar, hopefully you guys are doing fantastic. All right, so let's get right in to today's. Hold on a second. Wait for it. Wait for it. Okay. Let's get into today's cryptocurrently, guys, because we've got some news while we're waiting for Bitcoin to consolidate here briefly before continuing on. Our first story today comes from the Daily Hodl News and Insights, the digital economy. And of course, we are going to be talking about China Coin. Yes, one of the few people out there talking about China Coin from the American perspective and how it will affect the broader market. But last week, it was reported that something strange was going on at the same time that the Fed was propping up the repo markets to the tune of billions of dollars. Remember, we talked about that last week. A similar amount in physical currency and precious metals was disappearing from circulation. And the mystery, summed up briefly, was... Hold on a second. Let me make sure. Let's start over. We're going to get to that here in a second. Start over. Blame the teleprompter. Just kidding. Woo! All right. Anyways, sorry. That's what we're going to be talking about here in a second. I got my brain a little short wired there. Don't worry. I'll just cut that part out. So last week. All right. So again, our first story today coming from the Daily Hodl. Yeah, Jack's going to love that one. Yeah. Be laughing it up in the staff chat today. So last week, come on, what's going on here? Sorry, guys. You guys can see the news article quite fine. I have a different article pulled up on my screen. There we go. I feel like somebody broke my... There we go. Okay, we're good now. Is everybody with me? All right. Da Vinci, good to see you, my friend. Okay, so talking about China Coin. Our first story today coming from the Daily Hodl. Title of the article, China completes testing of framework for digital currency, preps for rollout. Again, one of the few channels talking about the China CBDC, the central bank digital coin, digital currency, digital asset, whatever you'd like to call it, from the American perspective and how we believe that it'll affect the broader market. So the next phase of China's central bank digital currency is gearing up for launch. We talked about earlier how they have already launched test pilots in several districts in China and how they're going to be experiencing a deeper, broader, fuller commercial bank rollout moving into 2020. And the preliminary testing phase of China's new digital currency is already complete. So in comments made to the South China Morning Post, head researcher at the PBOC, the People's Bank of China, has unveiled details on exactly how China aims to become the first cashless society on planet Earth. At least so far as I'm aware. Maybe there are underground layers where the lizard people don't use cash. I don't know. I haven't been down there since last September. Now, this individual confirmed on Saturday that China's upcoming digital currency will be a digital form of the yuan and that there will be no speculation on its value allowed legally in China. Of course, there may or may not be speculative markets that pop up somehow decentralized, but according to this individual, the digital currency / electronic payment, the DCEP, which is the name of the project for the digital currency, has completed its testing phase, as we reported on earlier this month, when 7 state-owned companies, including 2 commercial banks, began the trial run, taking place in 2 provinces. As described, the completion of the test phase follows other milestones, including finalization of the, quote, top-level design, early formulation, and 5 years of research that has gone into this. Again, China first out of the gate with this, the first cashless society that we're likely to see. Now, the next phase of the People's Bank of China is to begin pilot programs in advance of their digital currency's official launch. They have been pushing to overhaul China has been pushing to overhaul their entire financial services industry. They have implemented new policies to the effect that will promote mobile and digital technology, particularly in rural areas, because they want every individual to have the easy access to this because they do want to replace cash. That's their full mission statement here. It's completely outlined in all of their official documentation. Now, according to a previous report that the People's Bank of China issued in January, quote, rural financial services continue to improve. The full coverage of the township financial institutions network has been basically achieved already, and digital financial inclusion has been effectively popularized in rural areas. The rural payment service environment has continued to improve. Bank cards have helped farmers withdraw money to achieve sustainable development, and emerging payment methods such as mobile payment have gained popularity in rural areas. End quote. Now, as the world's second largest economy prepares to launch a digital yuan to strengthen its position in the digital economy, now, of course, top officials in the United States are waiting on the sidelines. The world's largest economy is sidelined. Despite revelations that central bankers around the world are pursuing the new technology, and despite recent reports that physical US dollars seem to be vanishing without a trace, US Treasury Secretary Steve Mnuchin and Federal Reserve Chairman Jerome Powell says there is no need for a digital dollar. Why would they? Why would they want to jeopardize the position why would they want to jeopardize their position of hegemony, of economic hegemony? Now, in the show notes, if you guys go check out the show notes that we publish at breakingbitcoin.money, where you can also find our podcast. Again, we're available on Spotify, Podbean, Google Play Music, Google Podcasts, iTunes, 5-star reviews are highly appreciated. It does help us out with the algorithm. We're going to link to the zero hedge story that we're going to be talking about later on, that I kind of pitched into as I'm kind of excited about it, about where are all the dollars going. So that link will be in the show notes that you guys can get at breakingbitcoin.money. If you guys want that link to the zero hedge article, I'll also put it down in the description of the video. Okay. Now, let me know your guys' thoughts and comments on this. Again, we try to talk about the reality of how the world is going to change. Part of being a speculator, part of being a trader or an investor is using the best tools at your disposal to attempt to gain a good bead for the future. And while predicting the future, whether in price or in trend, is impossible, it all comes down to building a strategy, understanding the potential upside and downside of any opportunity, and having a plan for when the market moves in your favor or when the trend moves in your favor, and having a plan for when it does not, right? Self-preservation is the ultimate tool. Now, our second story is coming to us today from the Wall Street Journal, and where, of course, the eminent Wall Street Journal. So I'm not going to read the full story. I'm not going to subscribe. I'm not going to sign in. This bastion of officiality here, Wall Street Journal. Fight the man. But where is all the fiat going? Where is all the fiat going? So last week, it was reported that something strange was going on around the same time that we were talking about the Fed propping up the overnight repo markets with injections of billions of dollars for liquidity into the repo market. Meltdown that we've been covering for quite a while that I don't hear anybody else talking about, and how concerning this is to the overall economy, because this is exactly how the 2008 financial crisis kicked off in the first place. It was defaulting, commercial banks, investment banks. It begins a cascade, and this time, as soon as there was a pull in overnight liquidity, they went right to the Fed. The Fed just started doling out money. This was what caused the chaos to begin with, because nobody wanted to go, but eventually a bank had to default. This time they were like, we know we're totally screwed. Please give us money. And the Fed was like, yes, you guys can have all the money you want. Well, the money comes from somewhere, right? It's borrowed from somebody to pay to somebody, right? And it devalues your savings. So if you guys are into that, long the banks and short Bitcoin, I guess. But anyways, now, but something interesting was also occurring at that same point in time, because a similar amount of precious metals and physical currency was disappearing from circulation in the American markets. Now, the mystery summed up briefly is this. While the Fed prints new money into circulation, there does seem to be currency that is completely disappearing off the face of the earth, and nobody knows where or why. Now, in this Wall Street Journal article from the 12th of December, titled, "The World's Cash is Disappearing, Bankers Aren't Sure Where It Went," central bankers seem to be scratching their heads trying to explain where cash is going, right? Physical currency. Now, quote, "The Swiss might be hiding it. The Germans are probably hoarding." Now, a few days later, Fox Business picked up on the story when they reported that as much as $1.5 trillion of the world's physical cash, with $100 bills making up the vast majority, are reportedly unaccounted for in world circulation. Unaccounted for. $1.5 trillion worth of physical currency is missing. This is a global problem, just to put a pin in this. And this is a curious case, of central banks around the world seeming to most likely be hoarding USD notes, right? Reserve notes, particularly in an era where the trend is now largely to be going cashless. Now, in a recent segment, Fox Business anchor Lou Dobbs faced off with the man who should know the best, Treasury Secretary Steve Mnuchin. And Mnuchin's response was, quote, "Literally, a lot of these $100 bills are likely sitting in bank vaults all over the world," end quote. Now, Mnuchin explained, to the best of his, again, addled ability, that due to the climate of negative interest rates, people are turning to the American dollar as a solid investment. Of course he would say that. The United States Treasury Secretary would say, well, clearly just central banks have so much faith in the dollar that they're just hoarding it, which, again, one could say, fortunately or unfortunately, is most likely the case. Now, although this does not directly address where the notes are going or why they are being hoarded, it would seem that there is a growing appetite for physical assets, for physical currency, and even gold around the world from central banks, suggesting that the currently artificially inflated markets are at a tipping point. and insiders are now quietly cashing out. That's my thought. That's my thought. And this is really ironic with this trend to go cashless, with this trend of governments around the world beginning to impose digital alternatives, embrace digital alternatives, while they themselves are hoarding cash like it's going out of style. Conspiracy theorists nuts, go wild. Go. Now, some would argue that the cash is being quietly stashed away by those anticipating central banks around the world to do everything in their power to reduce the amount of physical currency in circulation and replace it with an easily trackable digital alternative. This is the other, of course, big alternative, that this is merely a preparation plan of removing physical currency from circulation as quickly as possible to force individuals to use centralized, fully controlled, fully categorized central bank digital assets, right? Which I've been saying this for a long time. I've been saying that this is going to happen for a long time. Hoard your physical assets, guys. Hoard your physical assets because the central banks are going to be taking them quicker than you think. Now, there is an interesting Zero Hedge article that we referenced, and it came out back in August, that there are now more $100 bills in circulation than $1 bills, according to data from the Federal Reserve, which found that there are more 100s than any other denomination of U.S. currency. The bank estimated that 80% of all $100 bills last year were actually in circulation in foreign countries outside of the United States, and explained that residents in other countries, particularly those with unstable financial systems, are utilizing the notes as safe havens because they do not trust their own sovereign currency in their country. The German central bank, for example, has recently estimated that more than 150 billion euros are being hoarded in Germany. This has led the European Central Bank and others to ask the public for help. Everyone says that they are not hoarding cash, but the money is clearly somewhere, said a representative or the head of the issuance and circulation section in the European Central Bank's currency management division. The New Zealand Central Bank is reporting a similar phenomenon of money disappearing. In 2017, an estimated 1/3 of New Zealand's new banknotes headed overseas in 2017. And the bank could only identify the whereabouts of around 25% of all that cash. The rest, or that 75%, has disappeared. So it's going into countries, probably going into central bank vaults, and just getting fully absorbed in preparation of the new central bank digital alternative. I'll finish this off with a quote from Christian Hawkesby, Assistant Governor of the RBNZ, the Royal Bank of New Zealand. Quote, "Our sense is that we're in the same boat as a lot of other central banks out there. We can't fully explain why holdings of cash are rising and where they are going." So there's only two big alternatives, right? And you have to ask yourself what's more likely. People are hoarding cash. And unfortunately, I don't see, again, maybe I'm biased because I live in America, because I definitely don't see people hoarding cash around here. I see people just chomping at the bit for a federal digital dollar. It's all about convenience over here, not security. Or everything that these central banks are saying is not true for the most part, and that central banks are doing the majority of hoarding cash in preparation for a big rollout of digital currency offered by the central bank. We've talked about the dangers of these central bank digital assets before. They're not immutable. They're not censorship resistant. They're fully controlled. They're centrally managed. They're not decentralized. We've talked about these dangers before, and they allow the issuer of the currency to have far more control over your financial decisions and insight into your financial decisions than ever before. You guys think that utilizing credit cards for the majority of your payments right now are bad? You guys have no idea how bad it can get. And you put a central bank in full central authority of all your financial decisions. Right now, they're just issuing currency. Now they'll be able to peer into every transaction you make, rewrite every transaction you make, bar you from paying anybody that they want to. And this puts the individual in a very precarious situation in relationship to the state, right? Because there are going to be those out there who argue for all forms of some form of governmental authority, right? And that's fine. You guys don't got to go full board and cap. It takes a while. But I will say this, that largely individuals have had a modicum of freedom because there is a huge filter between issuance of the currency and their personal financial decisions. What you choose to spend your money on is considered by many, including myself, as your right, as freedom of speech, right? And taking that away, giving individuals direct control and not giving you an alternative to utilize, not a good idea. Not a good idea. Which is why alternatives like Bitcoin, decentralized cryptocurrencies, do represent the biggest alternative to this. Because it's only there so far that we do have finally an opportunity to step outside of the traditional financial system. And they are trying very, very hard to drag Bitcoin in. And again, you have many arguing that this is good for Bitcoin, that this will make number go up. But I just want to point you guys to exactly what we all know about the precious metals markets and suppression of the price, manipulation of the price, either through futures markets or dumping precious metals into the market to suppress spot activity. This is exactly what's now occurring with Bitcoin. Kind of the difference, though, is that gold is difficult to move, transact, kind of step outside of that financial control. Bitcoin is relatively lightweight, I'm told. Not very heavy to carry around your private keys. So we finally have an opportunity to step outside. That's going to take a while. It's going to take a while before we can get to that matrix level where, no, Neil, I'm telling you, by the time that you can trade your Bitcoins in for millions of dollars, you won't have to, right? It's going to take us a long time to get there. But that's the goal. Whether Bitcoin crosses the finish line, whether it's something else, the ethos is still there and still alive. So these are all things I want you guys to be aware of as you're making your plans for the future. Again, you don't need to know the future. You don't need to predict the future. But you need to have an idea and you need to have a plan, whichever way the market moves. So let me know what your plans are, what your plans are for the future, what your plans are for the digital rollout of the cashless, for the digital rollouts of these central bank digital assets in the cashless society, suppression of cash, the potential suppression of precious metal prices, the potential suppression of Bitcoin's price. Leave your comments in the section down below as to how you guys are taking steps to protect yourself or what awareness you guys have of these issues. I will randomly select one of you guys. Not only will I respond to your comments, but I will randomly select one of you guys tomorrow for the winner of the crypto comment giveaway. If you guys want 8,000 XSPC Spectre security coins coming into your wallet, hot and ready, leave that comment down below, guys. All right. Back into the world of cryptocurrency with our third story coming to us from, of course, the Bitcoinist. Now, according to BITMEX research, IEO's shocking research has emerged from the 2019 IEO craze from BITMEX research, and that they have largely, pretty much across the board, have been completely bust projects for investors. Now, earlier this year in May, BITMEX published its initial report on the ICO and IEO spaces, concluding that the general market was performing much better than initial coin offerings in general. And several months later, with IEOs being not much different in nature from IEOs, they seemed to be following a similar fledgling trend that defined the boom but mostly bust era of ICOs. Now, while many ICO projects have been plagued with high incidence of scams, many aspiring blockchain projects did seek out this new crowdfunding model. If you guys remember the narrative of the ICO, well, they're going to change the way we invest, bro. Leveraging. So in 2019, it seemed that we emerged upon a new trend, which is leveraging established exchanges as launch pads. Right? They turned toward these platforms for their fundraising efforts for new coin projects. Now, while the ICO market was pretty much a free fall in 2019, BITMEX estimated their collective tumble at 97% in the first quarter of 2019. While IEOs were holding steady at the time, BITMEX did predict earlier this year that they would go the way of the ICOs in the coming months. And it now seems that the BITMEX IEO dump call was spot on. Now, in their update of the IEO report, the exchange says that all 11 IEO tokens that it has tracked since May of 2019 have declined significantly in price, a particularly bad sign for these would-be coins, given the market has otherwise performed pretty well in 2019 at this time period. Almost all the tokens in their studies are down more than 80%, with the exception of Matic, an IEO that debuted on Binance just as their study began. while that one has seen its value jump as high as 255% since then. So here is the IEO chart of the coins that they have tracked. These include BlockCloud, Gifto, Multivac, Veriblock, Top, Fetch AI, Bread, Seller, Network, or Newton, excuse me, DOS Network, BitTorrent, and the one exception of Matic, right? One exception of Matic. And of course, so we've got Gifto, Fetch AI, Bread, Seller falling over 80%, BlockCloud and OKEx, IEO tumbled as much as 98%. And with certain IEO tokens trading at significant discounts over the opening or IEO price, certain crypto investors have found themselves attracted to purchase these depreciated assets. But the BITMEX report and the larger question here it would be asking whether this strategy is more of a fool's errand to chase a collapsing asset. You know, how many of you dip buyers on ICO projects have turned out very happy in the end? So far, only 4 of the 12 IEO tokens monitored by this report have generated positive investment returns, including Matic, BitTorrent, DOS Network, and Bread. The rest of the tokens have only declined relative to the offering price, with seemingly no end in sight for the bleed out. So, I have been very speculative about IEOs. Now, I have played a few of them, right? And again, largely been somewhat successful in those trades. But again, the whole buy and hold IEO strategies has never been my bag. If you guys have chosen to go down that route, I don't think that you're wrong. I don't think that you're silly. This is one of those realms of cryptocurrency where you can take small risks, small positions and assets and experience very dramatic, pronounced, insane returns. And it's okay to do that. It's okay to do that. As I've said many times, I have certain low sats that I track, and I will take portions of profits from trades, and I will buy depreciated prices on them. And that's an opportunity for me to multiply factors of my profit. And it's not a bad strategy, right? It's a trophy strategy. But instead of the trophy strategy, I'm exchanging that trophy for another coins that I have picked this out with. And you just follow the trends of the low sats, and that's most of the guys that I know that do that have pretty good success with that. But let me know your guys' thoughts in the comment section down below. Have you guys purchased any IEOs, or what's your experience with IEOs? Have you mostly just traded them like I have, on Binance using your regular trading strategy? Do you guys have a particular strategy toward IEOs? And kind of how do you feel about the space in general? Is it a huge scam? Did you guys see this coming? Or and for anybody who's been wrapped up in the IEOs and is particularly an investor in IEOs, let me know why. Let me know why in the comment section down below. Now, final story of the day. Then we'll get into your questions. Final story of the day is coming to us from Trust Nodes, and we've got a Ethereum hard fork coming up, guys. Now, of course, with the Ethereum mainnet, which implemented the Istanbul hard fork just a couple of weeks ago, node operators are now being informed that they need to get preparing for the Muir Glacier hard fork set to go live January 1st, 2020. Quote, who the F decided to do a hard fork on a day that is an almost universal holiday? So just do some Vitalik clapping for these decisions, guys. Hudson Jameson, core developer over at the Ethereum Foundation, published instructions earlier today on how Ethereum node operators can go about making preparations for the Muir Glacier update. Being described as a micro fork, Muir Glacier is a little unusual as far as hard forks seem to be concerned. Unlike Istanbul or Constantinople, which were system-wide upgrades, this hard fork consists of only one change to the blockchain consensus protocol. This hard fork is going to be implemented on January 1st, 2020, with a target block number of 9,200,000. Now, the ETH community seems to be a little upset today, with many Twitter users voicing discontent at the timing of the update. With it taking place on a day that is pretty much universally considered a holiday, dApp developers in particular are not happy that they will have to be on call to see the smooth rollout of the update to the network on New Year's Day. For example, the same individual who I quoted just a second ago, Jorge of Aragon. Of course, Aragon's been complaining about Ethereum for quite a while, complaining about the Istanbul fork as well, and I believe that story came from Trust Nodes as well. So maybe Aragon kicking a little bit to Trust Nodes here. But quote, he says he's associated with Aragon. He tweeted out today, quote, I am trying hard not to be negative about Ethereum lately. Like right here. This isn't the tweet, sorry. But here's a tweet from him. I am trying hard not to be negative about Ethereum lately. Picking cool days is great when you were a core developer, but now someone from my team has to work on a day that they were originally free. You know, I've worked in a factory before. I get it, man. Still, there are angry calls to, quote, have someone at the Ethereum Foundation fired, end quote, for not accounting for the possibility that this planned update can happen, you know, that this planned update can happen to fall on a day that many consider to be a sacred or have set aside for generally hangover recovery. Time with their family. I meant time with their family. Now, the upcoming update is required to customize the block time, or the time that it takes for one block to be validated by the entire network. This is said to be needed to prevent network degradation in terms of wait times for confirming transactions and for dApps, decentralized applications. Now, owners that are holding on to Ethereum in their wallets, exchanges, or ledgers, you guys don't need to do anything unless informed to take additional steps by your respective exchange or wallet service. However, node operators should upgrade their software to the latest version, and any Ethereum nodes not yet upgraded to the Istanbul hard fork should be upgrading their nodes. So individuals that haven't upgraded to the Istanbul hard fork can just upgrade to the Muir Glacier update directly. But if you guys haven't upgraded to Istanbul already, you should probably do that. So again, let me know your guys' thoughts down below. Is this a good idea? Is there some purpose behind this? Is this a sign of the full-heartedness of the Ethereum Foundation, or is this just a misunderstanding? And it is what it is. We just picked January 1st, nice clean day. Oh, sorry that that's inconvenient, but hey, we're here to do work, guys. So you guys want to drink, or you guys want to get this crypto? Well, let me know your guys' thoughts. With that being said, that ends our cryptocurrency segment. Let's get back to the live charts. Let's check back in with Bitcoin. Nothing really happening. Low volatility. Just riding half of my position size. Quite relaxed right now. And let's get to the Q&A section. See how you guys are doing. Let's do the sound off in the chat. Let me see here. Eli Back says, hopefully the Christmas pump is helping you guys buy some nice gifts. Yes. So, I'm pretty happy. I'm not, it is the Christmas season. I was able to spend less than I planned on Christmas in general. I had to arrange some travel arrangements for family to come in. Bought some last minute gifts. You always do that. I've talked about this before. I have a very clear policy. I'm not Scrooge McDuck, but I am financially frugal, and I teach that message to my children. I teach that message to my friends, and I stand for what I believe in. I believe that Christmas does not need consumerism to make it special. It is nice to get something for somebody to show that you appreciate them. And we live in a very consumer-centric universe and world, and it can be often quite difficult to avoid getting through the holiday season without dipping into your pocketbook in a more pronounced fashion than you had originally intended. And so what you can do to help avoid this is just, again, have a plan. Just have a plan, right? And for me, my plan is very simple. Everybody that is in my life that I love knows that I love them. And if I don't tell you enough, I love all you guys, right? And so Christmas for me is more about celebrating and honoring the bond between friendships, between loved ones, than it is consumerism. And if there's anybody in my life that I discover is upset that I didn't get them an expensive gift, or is upset that I didn't get them a gift, that's not somebody that I need in my life, because that's a very, very fragile, greedy, and selfish person who will most likely only lead to the detriment of my life. But it is a good feeling to show somebody that you care. Like, for example, one of my closest friends lives quite far away from me, and I don't get an opportunity to see them very often. And we haven't spoken for a few months. And we often speak quite regularly, right? But I know that he's been busy. He got assigned to a job. I've been busy. It's getting into the holiday season. So it's quite fine. We'll have to arrange like a couple weeks together. But he just hadn't spoken. And of course, I went and purchased him a gift, and it's going to show up at his house, and he doesn't know about it. And so it makes me feel good to be able to show with an object that I care about somebody, especially when we haven't talked in a while. But you don't need to do that, right? You don't need to go excessively into gifts, right? For me, for my guy friends, I picked a very tasteful item. I think it's really neat. I think they're really going to enjoy it. It's an item that I have purchased myself this year and that I like, that I use in my daily routine. So they will be getting that. And then some individuals I knew wanted something. But I have just a simple rule, right? I write down exactly how much money I can allocate to Christmas spending. And then I have a rule where everybody gets one gift, right? And I just determine that. I set my plans up in advance. I do my buys in advance. I purchase the gifts and then I give them to them. And I don't expect anything in return. I've never been upset to not receive a Christmas present from somebody. I've given gifts to somebody and not gotten one in return. And the worst thing that you can do is like feel bitter or disheartened, right? The opposite thing that you can do as well, in my opinion, is if you get a gift from somebody and then you hadn't purchased a gift for them, don't go buy them a gift, is my personal recommendation. Write them a thank you card. By the way, my parents taught me to do this when I was young, so I'm just going to get on the soapbox here. When you get a gift from somebody, write them a dang thank you note and put it in the mail like an adult human person. Like, that's a good thing to do. Anytime you receive a gift, you should always write a thank you note. Like, that's just good manners. And we've gotten away from that. And we've also gotten away from largely living life rationally or having self-respect. So just a good kind of Christmas tip there, right? Thank you notes. But one gift per person, especially for your kids. I think this is the area, again, on my parenting soapbox. This is where people make the biggest mistake. They inundate their children with presents that do not largely deserve them, right? Your children do not deserve generally and or need like $2,000 worth of stuff. They do not need the latest Xbox, especially if their behavior doesn't justify a reward. They do not need everything that they want. We're sending mostly our kids to public schools, and we're allowing our kids to be exposed to all of kind of to YouTube and Twitch and advertising and this entire consumerism that's being shoved down their throat. And it is incentivizing them and encouraging them and making them believe that they need to have the stuff that they see their YouTube streamers or all the people that they watch. They want all that stuff. They want to have what their friends have, on top of the like childhood bragging and boasting and trying to have the bigger, better thing, which is always a thing. That's how it was when I was a kid. They don't need that. They need to be taught financial responsibility, personal responsibility, courage, honesty, and wisdom. That's what kids need to be taught, right? And buying them a bunch of stuff that they will not appreciate is not getting you any farther in your goal. You're not helping your kid if you are a parent, unfortunately, like many parents who, you get to the end of the year and you felt like, I wish I would have spent more time with my kids this year, or maybe I got upset and I raised my voice, or maybe I've been working a lot of hours, or, maybe I just feel like I've been a bad parent. And, I talk to a lot of parents that feel this way, and they get to this time of year and they had planned not to, but they always end up kind of overspending and hurting themselves financially and getting their kids a lot of stuff that they don't need, especially if they bought gifts late and they're in the panic and now they're paying bad deals and bad prices, blah, blah, blah. Don't do that, right? Don't do that. Tell your kids you love them, spend the day with them, take more of an active interest in their things and get them one tasteful item, right? One tasteful item for your kids. I think that if you start that early and you raise your kid to understand that, not only that Christmas is about giving, not receiving. Christmas is supposed to be about giving, not receiving. Then I think you're setting your child up for better long-term success. And that's what I've done with my children. Christmas is about giving, not receiving. And I think that really starts, or that's really helped if you require your kids to write thank you notes. So teach your kids to write thank you notes, and Christmas goes a lot better from, like, let's say 8 years to teenage years. Have your kids write thank you notes. Jap says, how do you get Coinbase and the ribbons and BitMEX all up at one time? Maybe a silly question. So just over on TradingView, I think you may be referring to this chart. Just on the Coinbase chart, and then I have hash ribbons right here, and then this is just a BitMEX funding indicator, right? Now you can do split screen, like with this thing right here. You can do split screen. You can do like 1, 2, 3, 4 octo screen. You know what I mean? If you want, yeah, a lot of options over on TradingView. Definitely, if you're not using the charting software TradingView, I do highly recommend that. It's what I utilize. I think it's the best out there. tv.crackingcryptocurrency.com. You can actually go sign up for TradingView. You can use it for free, but you're just going to get some really neat features if you pay for at least the smallest amount. DIY guy says, dead sat bounce. I mean cat, or do I? Tyler Dukacheks asks, do we consider the CME gap filled at this point? So that is going to be a matter of trading preference. For me, no. I would like to see the gap filled all the way. So for this trade setup, I had a first take profit at the top barrier, and then I just made the adjustment on the $50 premium. So I've pulled 50% profit. I got filled, I believe, at 70. What was my... I got it here somewhere. Sorry, let me double check. What was my first take profit here? 74.31. I got filled at 74.31 on my short. So that was half of my position size. I haven't moved my stop loss to break even yet. Again, as I said, I'm monitoring this. And but no, for me, I would not consider the gap filled. I think that really aggressive people are going to try to long this bounce, and I think they're going to do a retest of supply and get smacked in the face. Just my personal idea. Volume is falling. So again, we kind of want to see this play out a little bit, but volume is falling and price is moving down, and that's bearish. It's bearish. Scrooge McDuck, Merry Christmas, Justin. Merry Christmas to you, my friend. Kel Kimball 100. How to control your emotions, asks over on Twitch. Just takes experience, but it just takes mindfulness, right? You have to make a commitment to not make irrational choices based on emotion, okay? So here are some simple, practical ways to help control your emotions in trading. These are things that I teach my students. Rule number 1, when you wake up in the morning, the first thing that you need to do is absolutely nothing. Do not look at your phone. Do not look at the charts. Do not talk to anyone. When you first wake up in the morning, get up, make your bed, sit back down on your bed, close your eyes, put your hands on your knees, and just focus in on you for 5 to 15 minutes. Concentrate on being aware of your surroundings, being aware of who you are, taking deep breaths, and thinking about exactly how your day is going to go. Tell yourself what you're going to do, not what you want to do, what you're going to do. Establish that sense of control over your own destiny in your mind in the morning, and make a commitment to be aware of your fears, of your anxieties, to be aware of your surroundings, to speak correctly, to think before speaking, to speak with wisdom, to speak with courage, and to be courageous and brave. That's what I do every single morning, and it's a huge contributing factor and why I largely feel positive most of the time. There's always downsides. I go through stress. I go through unhappiness. I go through sadness. I've gone through periods of despair. I've had quite an interesting life. Seen all kinds of sides of the emotional roller coaster, guys. I trade crypto. But I think that's absolutely essential. You need to start off the day feeling powerful and strong, because you are powerful and strong if you just remember that. You just remember that. So you have to remind yourself. You remind yourself by being aware who you are and your surroundings. Number 2, more specific to trading. Never ever buy on a big green candle. Never ever sell on a big red candle. Now, as you become experienced in the market, you can begin to do that if it fits in your strategy and you start to understand what a real breakout or breakdown look like. But in the beginning, and again, let me be very clear about this, for your first 2 years, everybody's learning curve is a little different, but 2 years, I'm just going to say that as just a generalized point in time. For the first 2 years of your trading career, don't do that. It's a big green candle and you feel FOMO. You're like, oh man, this is going to go up. I need to get in on this trade. Nope, you're not allowed to do that. You are not allowed to do that. Write that down on a piece of paper that you will never do that. Understand what it means when you write that, then put that on the desk where you trade. Similarly for selling or shorting on a big red candle. Just don't ever do that. If you do not allow yourself to do that and you review that every time that you sit down to trade, then you won't make that mistake. Because that is how you sell the bottom and buy the top. And you don't want to do that. If you can just eliminate those options, you've eliminated some of the majority of retail traders' biggest losses and biggest mistakes, right? So never do that. Number 3 is always trade with a plan. Never, ever, ever just open up a chart, look at it for a little bit, and then to take a trade just because it feels right. Never do that. That is your first step in the journey toward becoming a consistently profitable trader. I have met a handful of people who can do that, who can just pull open the chart, and I've traded for a long time. I've talked to all kinds of traders. There are a few people out there, and I mean a few, who can just look at the chart, look at naked price action, and just get it right, right? They just get it right. There are a few people who can do that. I'm sure there are going to be some people who say that it's a skill that you can learn, blah, 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 blah. Like, I don't really think so. I think some people are born with some like magical intuitive ability to just follow price along and be more right than not. But for myself and for the majority of everybody out there, you need a strategy that is defined to have success in the market, right? You need to control your emotions. You need to write out your position sizing strategy. You need to write out your risk management strategy. You need to write out your entry strategy. You need to write out your exit strategy. You need to test and have a plan for all of these things. And for every single trade that you ever put on for the rest of your life, you need to know a few things. When are you going to enter? And what needs to happen for you to enter? Specifically, as specific as possible. Not, well, if price goes up here and gets rejected, then I'll enter. That's too vague. I need to see a candle close above or below a price level. I need to see a candle open and close above or below a price level. I need to see a candle's wick touch or come within 0.5% of this moving average and then close below. Very specific. Or I need this indicator to close with this signal. Those are typically what we're more going to talk about here. We're indicator guys generally around here. You need to know when you're going to enter and why you're going to enter. You need to know when you're going to take profit and take profit there no matter what, right? This is a problem. People get into a trade. They happen to get a good entry. Price starts moving in their favor. They have a take profit and they just get this magical feeling that price should just keep on going and they pull the take profit. They're like, well, I can make way more money on this. Let me just set this take profit lower or higher. Don't do that. That's a fool thing. That's a foolish thing. Only fools do that. Professional traders, serious traders, take profit when they said they were going to take profit. No exceptions every single time. Period. The market's not going anywhere, guys. It's not the last movement. There's going to be 1,000 more. All right. Take profit when you said you'd take profit. Always pull cash off the table. And the last thing you need to know is when you're going to exit the trade and exactly why you're going to exit the trade when your trade setup has been invalidated and it's a loss. Pull your loser early and pull it every single time and reduce the option of massive losses affecting your account balance. And pro tip, when you're beginning trading, first 2 years or so, first 6 months, whatever, if you exit a trade at a loss, immediately close the chart and don't look at it for 48 hours. Preferably a week. Just go to another trade. The worst thing you can do to yourself is hindsight thinking, well, if I just would have stayed in the trade or added risk, it would have been a winner. Don't think that way. Losers think that way. You're not a loser. You're a winner. Don't do that to yourself. Just some thoughts. And most importantly, as Ricky Thompson said over here, it is his trading systems that allow him to control his emotions. Absolutely correct. So what I just said, have a trading strategy, and this becomes very easy. Emotional discipline is bolstered and strengthened by having a trading strategy, and vice versa. Take the time to develop a strategy and stop clicking random buttons. You'll do okay. Crypto God asks, when should I start hedging VeChain? I'm not aware of how you can hedge VeChain. What you can hedge is your underlying Bitcoin exposure if you're going to be trading back into Bitcoin. As far as hedging VeChain, like when should you start taking profit? It depends on a lot of factors. It depends on if you consider VeChain an investment, if you intend to sell, if you are taking a macro trade, if you are taking a micro trade. Oh, I was on the CMEs. So let's, yeah. I'm going to stay on the CMEs here. Well, from the original 2conf, 2 of 4 setup, which came right here. here in conjunction with the reversal baseline bounce. Quite beautiful. Let's look at Quadriga. Literally like right here. So literally right here is where I would pull some profit off the table and move my stop loss to break even. Because the V-chain entry came right here, reversal baseline bounce, and you are up about 20%. And I feel that that would be a little foolish to let that opportunity escape. You do have this nice, listen, let's talk about patterns here for a second, although I'm not a big fan. You have had a double bottom, but you also have a lower high, and you are expecting a lower high. So even if you want to go trend line, if you want to be a trend line bro, right? No, that's not a very good one. That's not really a good opportunity there. Yeah, maybe. Look at that. I freaking hate trend lines. Something like this, right? So this might, give you a good target to the upside, maybe another 15%, but you're more than halfway there. Take it. Take it. Or at least have some area. Ultimately, that decision is yours. That choice is yours. It's your trade, not mine. I don't know where you entered or what your thoughts were or what your trade thesis is or what your setup is or what indicators you're looking at. But take wherever you say that you should take profit, take profit. DIY guy gets it on the head. Technical analysis is the easy part. Controlling emotions and accepting risk is the challenge. Common Man Crypto says, given the way we have rejected from 7750, it would suggest that the logarithmic 0.382 retracement, i.e. Fibonacci retracement, would represent some serious resistance. I don't know. Bitcoin is still in the bearish channel. I'm not convinced yet. Agency says, careful on the road today, people. Lots of boomers frantically doing some late Christmas shopping. These soccer moms have no regard for human life right now. Matt Sandstrom says, where am I buying bigly? 4.9K, sir. Jap, Merry Christmas to me. Merry Christmas to me, please. Boris Frid Manhe. Or hopefully I said that. I'm sorry, man. Justin, what would I think of going for a reversal baseline bounce here on the long side? I have a small long from 7360. Use the 12-hour 55 EMA as my baseline for this one. Let's see here. Okay, let's go to Bitcoin. So I guess one thing that, and Da Vinci, thank you so much, my friend. Thank you so much, my friend, for the generous donation. And he says, there is a saying in Wall Street, cut your losses and let your winners run. I think we also say that around the group quite a bit, my brother. Shout out to you, Da Vinci, man. One of the best traders out there. Okay. Reversal baseline bounce. Well, so first off, I just want to touch on a few things here. You said that you used the 55 12-hour EMA for this one. Now, I just want to beat a dead horse. You have, I at least, have a primary, a secondary, and a tertiary baseline. They all do slightly different things. But for the most part, they're dynamic levels of support and resistance. I look for crossovers, and then I look for breakouts. So those in general fall more into my discretionary trading. But there is one single primary baseline, and that is where I notice that bounces happen the most if we're in a bullish state. So since we're not in a bullish market yet, in my opinion, in my macro opinion, that means that reversal baseline bounces, if you're going to take them, need to be taken at a little less risk than normal. Because again, just following with trend following theory and concepts, if you are in a bull market, reversions to the mean are buying opportunities to the upside, right? So long opportunities. When you're in a bearish market, corrections to the upside or reversions to the mean, so price moving up, is generally an opportunity to enter into short positions. And we're still there for the most part. We're still there. Now we'll see. I mean, the next few days could be pretty interesting, man. Like, I am I'm fairly, what's the word I'm looking for? I'm not going to lie. I'm fairly not very confident in the bullish position at this point in time. I'm willing to take it if I get the technical readout, but I feel far more confident in the short, right? And I understand that puts me at an opportunity to get to be wrong, to be invalidated. But I've had a winning trade on this one so far, and as I said earlier, we've looked at a lot of objective technical things, and for me, the bearish case is just much stronger at this point in time. But we'll see. The hash ribbon's ending is pretty good. If we can get some bullish price action, get like a moving average crossover and invalidate some of these levels and get over like 8K, we'll be talking a different tune. I really want to see what happens if we do end up kind of pulling up from this, maybe a couple days of sideways and then another big green candle. We'll be monitoring kind of the LTFs to catch that. But the next target would be something like 8K. If we can get up there and kind of seeing what we do there. Because again, that's our more pivotal HVN, daily 55 EMA. Interesting. So right now, just taking it day by day. Let's see here until we kind of get out of this area. Until I can get some either buying Bigly zone or shorting Bigly zone, which again still represents 8K. This wasn't originally my shorting Bigly zone, but I'll take it. Specifically talking about the reversal baseline bounce. You talked about the 12-hour and you talked about the 55 EMA. This isn't too bad. If I was looking for a reversal baseline bounce, again, I would like to see that time frame have the 1355 crossover. I'd like to see that baseline crossover confirm that we're in a bull market. You do got the primary and tertiary crossover, so the 13 is above the 21. I'm not going to, so it's not my trade. It's actually completely counter to my trade. If this is something that you've back tested, I wouldn't say that it's terrible. On the 12-hour, we can see just like the 4-hour, just like the daily, honestly, the 55 does represent a powerful level of dynamic resistance. We've tested its vicinity once, twice, 3, 4 times. And then we finally broke to the upside and we're back testing it as a level of support. It's a decent setup. I think that it's counter to my higher time frame analysis, so it's not really a trade that I get excited about. But if your macro analysis is more bullish than mine, it's not a bad setup. I approve. Just manage your risk, have an idea of what you're going to do if you get invalidated, and kind of how you should protect yourself. I would recommend, again, I've recommended to everybody, guys, if you're going to take long trades, still be hedged. So you have $10,000. Have a $10,000 short sell. It's very like 1x leverage or 3x leverage is what I do so that I can actually hold most of my funds in cold storage. And then you can actually take trades to the upside because you're just trading from a cash basis, right? So you're not going to lose your shirt if you're wrong. You're just going to lose money on the trade. Whereas if you're fully long and you have a losing trade, not only has your entire stack gone down, but you've also lost money on the trade. So it's compounding problem. Challenged investor asks, am I more profitable trading altcoins or Bitcoin, or does it not even matter? So when I have a big win on an altcoin, it's generally a very pronounced win. And I'm generally consistently profitable on Bitcoin, right? Like altcoins, swing trading, I have a higher than lower win rate, but I do go through periods where I have small losses, like periods of small losses. That's kind of honestly where most of my focus is at right now, trying to optimize that. And it's generally, so it's either going to end with either the market's different, because I've been profitable this year on trading altcoins from a dollar perspective and from a BTC margin perspective. But it is getting a little harder to do it the way that I'm used to doing it. So I've got two options and I'm doing a lot of testing right now. And at the end of the year, we're getting to the end of the year, I'm going to review all my yearly data and make plans for how I'm going to set my systems moving into 2020. Either I'm going to take a different approach because I've been testing alternative methods this year and I'm going to be rolling out and reviewing their data with my analysts and my traders and developing a plan for 2020. Either I'm going to modify my approach slightly when it comes to altcoins, trade specific altcoin markets, or I'm going to replace altcoins with Forex potentially and only look for long swing opportunities on the weekly, right? So a couple opportunities there, a couple options. The other thing though is that on lower time frames, like day trading altcoins, I'm very, very good at that. So it's just all about your experience, what your type of setup is, what your bias is. And the biggest thing is trading in the direction of the trend, right? If altcoins are bullish macro, then there's generally good opportunities. They're highly volatile, good 30-minute, 15-minute period opportunities. But Yeah, you got to have the right system to catch those good daily breakouts. And luckily I have one, but now, blockchain education says that last statement, unfortunately, is wrong. No one is born with trading ability. What about assets that have very little volume? They can look awesome, but really suck in the end. You have to at least know what the indicators do, how they work together, and how to find the volume, and know what the volume threshold should be to be reliable. Yes, magic indicators for everyone that work without knowledge. Just kidding. You know, I'm not, so please correct me where I go astray here, my friend, but I just completely disagree with you. Again, so let's move this over to like the dating world. There are some individuals that are just naturally talented at attracting the opposite sex, and then there are some individuals that kind of have to develop a strategy for it, right? And we've got a whole industry that markets to that, right? It's very similar to trading. I have met individuals with almost no training who are just really good at trading, right? They just can, but again, I've met a literal handful, and I've met thousands of traders. So I disagree with you that there's nobody who is born good at trading. I don't know whether they're born good at trading or whether it's their experiences in life, but I have met a few people who do seem to have some natural gift for the art, like some natural ability to just nail it, right? And again, several of these people are professional traders, and they have a very what's the word I'm looking for? Unique strategy. Unique strategy, which to me appears to be complete lack of strategy, but I digress. And then you have to at least know what the indicators do and how they work together. So while I largely agree with that, I will also say that no, you actually don't, right? Like you can just you can just test an indicator to like when this line crosses this line, right? And then like test it with a few other indicators. So I know individuals that just do this. They don't understand what the indicator measures or how it works. They just test for raw signal hit rate and they're profitable. So I do completely disagree with you there. Now, while I do think that a comprehensive understanding of how an indicator works is good, and that's obviously where people should get to, I don't think it's a prerequisite. Like you can trade objective technical signals and not understand where that signal's coming from. You just have to, for example, if you find an indicator that you back tested on a long period of data, and you find that if you take a trade every time the green line crosses the red line and you're right 70% of the time, and then you plug your risk management system in and you're like, oh, wow, I make profit. And if you get those same results in live trading over a large data set and you have no idea how that indicator works, you're a profitable trader. I don't know what to tell you. The only thing that matters in this game is whether you make money or not. So I don't know if, I used to feel this way. Like several years ago that like if you didn't know what the RSI meant, bro, if you didn't understand fundamental price action, you're not even a trader. And then I shifted my focus from being pretentious and like being knowledgeable or being smart or being right. And then I shifted my focus to make, I realized that my intellectual focus should be just on making money. And that actually gave me a lot more respect for individuals that I had previously had somewhat, I would say, contempt for, right? Individuals that I felt didn't have my knowledge of the markets, hadn't read as much, hadn't studied as much, weren't as cool as much. They didn't know. Fucking noobs. And I just started to respect people who make money. And my life actually got a whole lot better, believe it or not. A lot of hate we all carry around in our hearts. We just gotta let that go. And if I misinterpreted that, I'm sorry, man. Much love to you, my brother, and Merry Christmas. With that being said, it is 2:10, and I've got my team that's waiting on me. I've got my members that want me to come in there. I love you guys so much. Sorry if I couldn't get to every single question. Cryptonomics says I should try a little ASMR on my stream. Let's see here. Hold on just a second. I saw something. Where'd it go? Yeah. Over here. All right. Starting to sound like the old videos on the website. Positivity and then ASMR and trading could be a new niche. Hey, man. It's a good idea, Cryptonomics. Ricky T, by the way, Forza World TV and Solar MKD, big winners. And Mr. Ultima Online over on D Live. Yeah, none of that, bro. None of that. Just get that hate right on out to your heart, man. I do not tolerate any of that. I don't care where you're from, what your name is, what color you are, what you believe. If you're a cool person, man, cool. Don't care about none of that nonsense. Life is too short, man. All right, guys. So listen, it is Monday. Thank you so much. Let's slide over here. It is Monday, guys. Thank you so much for all the support. I hope you've enjoyed today's episode. Make sure to show us some love. If you have enjoyed today's show, there is a thumbs up button down there. Maybe you've seen it. It looks like this. It really does help us out with the YouTube algorithmic gods. And we're already struggling under the gun because they don't like crypto in the first place. So highly appreciated. Make sure to subscribe. The notification bell will make sure you hear it every single day when we go live at 12 p.m. Central Standard Time till around 2 p.m. Central Standard Time. Every day is a little different. It's all an adventure, man. We're all learning and growing together. So much to say, guys. Thank you today. Thank you to today's sponsor, Coygo. They've built a great app. It's free for you guys to go check out. You can go check it out at coygo.crackingcryptocurrency.com, coygo.crackingcryptocurrency.com. And of course, if you guys would like to trade along with us, if you guys would like to receive our signals, our educational content, our mentoring, our private community, all of our tools, if you guys would like to learn our rules, our premium indicators, it's a lot. We're the fastest growing group out there, guys. Premium.crackingcryptocurrency.com. Again, like I said, we actually have a 7-day free trial now, so you guys can try it out. If you guys don't like it, you can just thumbs down the video. Totally cool. Anyways, but you'll love it. Now, thank you also to today's crypto comment giveaway sponsor, Spectre Security Coin. Good friend of the channel, good friend of the show. Make sure to go check them out. Links in the description down there below for everything you could possibly need in your life. Any questions, comments, concerns, sarcastic remarks, or death threats, leave them in the comment section down below. I'll try to get back to you in the next 48 hours. And can I get a bid at 4,800? Yes, I was an auctioneer in a previous life. Yes, we will be live tomorrow. Yes, we will be doing a show on Christmas Eve. Yes, we will be here tomorrow at noon. But yes, we will not be here. So no, we won't be here on Christmas. I do have to take the day off, guys. I'm sorry. I need the day with my family. Need to unplug. Need to unwind. I'm not even going to be trading that day. Already made the commitment. But listen. I've got a nice team. There are a couple guys in that team who aren't as Christmas spirity as I am. Although we don't yet have the analyst streaming set up, we've run into it, just not issues, but just planning everything out, getting the schedule going. They'll be around in the group for the premium members, and I'm sure for the general Discord as well, guys. Discord.crackingcryptocurrency.com to join our free community. And again, as I said, links in the description for everything you could need. Trade safely, guys. Be safe. The market's pretty volatile today. I'm still short. Gap isn't filled yet. Have discipline. Have courage. Have strength, guys. And I will see you in tomorrow's video. Be good.